GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior, with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis on MishTalk.com. Welcome back to the show, Mike.
Pleasure to be back on.
The big news in Canada, the Bank of Canada has just upped its setting interest rate by 0.25%. Doesn't sound like a lot, but when it's your first raise in 7 years, they're making a big deal out of it. Should we be worried about these interest rates?
Well, it's too late to be worried about them. We're in a bit of a global tightening move here now. The Fed is talking about normalizing its balance sheet. Other central banks are just beginning to raise rates. In Europe, we have the ECB is talking about, not about hiking, but about tapering the asset purchases it's doing. So we've got a bit of global tightening going on in a way. It certainly hasn't hit the stock market yet, and one can also make a claim that things are still so loosey-goosey that not much has been done. So we'll see. We'll see how far it goes. I did not think the Fed would get in as many hikes as they did, but they've proven me wrong. Certainly, the economy doesn't look very good to me, even though the unemployment rate is quite low here in the U.S.
Is that because it's underreported?
Oh, it's certainly underreported. The alternative measures show, if you count the people who just simply quit looking for a job, they're no longer called unemployed. They're not part of the labor force. We're looking at something like 8.6% unemployment. Still, that's fairly low. Actually, it's very low compared to a lot of places in Europe. I can't speak for Canada.
How big is the U.S. underground economy? I mean, those people have to be living on something.
Well, they're living on handouts. It's not necessarily an underground economy. Food stamp usage goes up nearly every month. The people claiming disability and receiving disability checks goes up every month. We have a lot of disability fraud. There's some cities and in some states where literally the entire town is on disability, and the measure of disability is mental anguish because they can't find a job. You know, that's what it boils down to. Certainly, we had a big push under Obama to get everyone on Medicaid. And so there is, in addition to that, there is some underground activity, but it's essentially government handouts that these people are surviving on.
Do you see the U.S. government legalizing marijuana because it's been such an economic windfall for the states that have made it legal?
I don't know. The Trump administration, I believe, is against it, but actually, it's really hard to say what they're for or against. One day they'll make a claim one way, and the next day they'll make a claim the other, a different way. Trump has made some claims on steel, which I think would be very damaging to the auto industry. Were he to impose these massive penalty tariffs on alleged dumping of steel from China. But the automakers are complaining, so maybe he'll listen to them. Who knows? With Trump, I always take the attitude, let's wait and see what they do, because you just can't depend on any statements. We don't have a wall. We don't have a tax bill. We've not repealed Obamacare. He's not done any of the things that he said that he would do, and so we just have to wait and see. But steel tariffs, I think, would be extremely damaging here, and especially when the auto sector is already weakening.
We'll have more with Mike Shedlock right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Shedlock. Mish, we know the U.S. auto sector is in difficulty. In Canada, it's still booming, but I suspect it's because they're offering the same incentives here as they are in the States, where they'll trim 20 grand off the price of a high-end pickup. Is that the way to do business?
Well, it's certainly the norm here. I believe it's the only way they can sell these things right now. But there are a number of headwinds here for the industry. We have hugely disruptive changes coming with self-driving cars. We've got a push for electric cars that's going to be retooling. So anyone who doesn't have a car probably can't afford one at this point, because we're certainly seeing loans that are going more and more and more subprime. We're seeing durations of loans being extended out to almost 8 years now, which is kind of crazy. We're seeing loans out to 6-7 years on used cars, that kind of thing. These people are getting into these, or they're immediately underwater on these kinds of purchases. I think repossessions are rising here. The whole sector just looks seriously in trouble, and anyone who has wanted to buy a new car, so there's not a lot of buyers left. I think the millennials have different attitudes towards cars than their parents. I'm still wondering actually who bought all these cars. The best I can come up with is retiring baby boomers, have a little bit of cash. Perhaps they're buying their last car, or they think it's going to be their last car. Used car prices are already plummeting, and with these disruptive changes coming, both in electric and self-driving features, cars that don't have them are going to continue to plunge in price. And so who's going to want to buy these first-generation self-driving cars anyway? There are a lot of headwinds between now and, say, 2022, those expecting a big rebound in cars next year or even 2019 are probably seriously mistaken here. And auto sector is pretty big. The demand, the steel that goes into it, chemicals, the materials, the parts. There are a lot of things here involved in the manufacturing of cars that's going to cause a ripple effect throughout the entire manufacturing industry.
I saw a report that said hundreds of people are trying to build self-driving cars, but like a lot of new technology, only 3 or 4 of them will actually survive the shakeout. Is that what you see?
Well, there's hundreds of Ford, GM, Chrysler, all the Nissan, Toyota, all the manufacturers are in a Diamond Chrysler. So they're all doing it. Google is doing it. There's Tesla. There's some independent companies out there that have a little bit of a niche component. Perhaps the radar that goes into it. There's actually hundreds, if not thousands, of companies, of people, all working to one end. And people tell me, Mish, this isn't coming. You're crazy. Your timeline is off. Well, I think, if anything, I'm not optimistic enough. The Ford has announced that they're going to have something by 2020. I expect they will make that date. I think these things won't be immediately widespread adopted when it comes to cars, but I think there's going to be immediate widespread adoption as soon as trucks are allowed to go on the interstate. And that is one area where the Trump administration is doing something right. Actually, the Obama administration before them was doing something right in looking at the regulations that it would take, to allow these things on highways. It's all coming sooner rather than later, even if there is some sort of last mile concern for trucks, where the truck self-drives itself from one hub to another, and then perhaps a driver takes it the final way into the city. I think we're likely to see some things like that. But tens of thousands of truck driving jobs are going to go as soon as this stuff hits the road, and I'm expecting 2021, 2022 at the latest.
We'll have more with Mish Shedlock right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're chatting with Mike Shedlock. Mish, what kind of jobs do you see taking the place of drivers and other people pushed out by intelligent technology?
I don't know. I get asked that all the time. And certainly, looking back, there's always been jobs. If we would have told someone in 1920 that 90% of the people on the farms would no longer be working on farms, they would have thought you were crazy, and they would have said, "Well, what's everyone going to be doing then?" Well. We now have the answer. In retrospect, you're going to be working on cars, on planes, on buses, on radios, on television. All of these things were not in existence back then, and they are there now. The problem now is first off, the speed at which some of these things are happening, and then the second problem is the Fed has kept the price of money so low, interest rate policy so low, it's exacerbating the problems associated with this. It's so easy for corporations to go out and borrow money at a cheap rate and to displace workers. If Fed interest rates were a lot higher and corporations had to spend let's say the interest rate was 8% to get a loan to buy this machinery, rather than 1 or 2%, to get a loan for machinery, it would be much more difficult for companies to massively embrace some of the technologies and retool to get rid of workers. The price of money is cheap, and we also have numerous states hiking up the minimum wage. Both of these two things are encouraging corporations to get rid of workers as fast as they can. That's kind of what's happening here right now. And with the Fed pushing inflation, we've got asset prices sky high. I expect another bust is right around the corner. Been saying this for a couple of years, but when it kicks in, it's going to be a doozy because of all of these imbalances that we did not correct from the last cycle.
Well, we're already seeing the high-tech displacement of people. McDonald's in Vancouver now has self-order kiosks and only a couple of people at the counter. At grocery stores, a lot of self-checkout, especially for people who only want to get 3 or 4 items through at once. So for the people elsewhere, they keep saying, well, they can always go work in high-tech. What about the people who don't have the brains to start coding and put together stuff?
Well, the problem with this high-tech theory is we're going to supposedly retrain these people so that, let's say, they're a Java programmer. There's so many Java programmers that are out of work and can't get work that are highly skilled, yet we're proposing to retrain these people. The government has no idea what to retrain these people in. There's probably a demand here for nurses, but not everyone is suitable for retraining into becoming a nurse. Other than the healthcare profession, taking care of the elderly, and a lot of those are actually low-paying jobs. They're very demanding jobs. They require some sort of empathy. This idea that we're going to train people into doing things technological when they don't have it, when there's so many people in these sectors already out of work, is ludicrous, but that's the scheme. And of course the student debt keeps piling up and piling up and piling up, selling these people the idea that they need to go out there and get retrained, so that they go out, get tens or hundreds of thousands of dollars of student loans, get retrained, and they're not qualified to do anything. So all of these imbalances are still building, Jim. This thing is going to blow sky high at some point. I don't know whether it's going to be one rate hike too much that's going to cause this, but it's actually too late to fix now because the debt has built back up. Home prices are back in a bubble. The stock market is back in a bubble. We're going to have another destructive round of asset bubble deflation coming up. I'm quite convinced of that. This is going to have a very, very deflationary ring to it when this whole thing does go sky high.
Mish, thank you so much for chatting with us.
Pleasure to be on.
My guest has been Mish Shedlock, editor of Mish's Global Economic Trend Analysis on mishtalk.com. You're listening to HowStreet.com radio. Any questions for us or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.